Welcome to HAMB's final webinar of the year. Happy holidays, everyone, and thank you for joining us. I am Judy Meredith with HAMB Hawaii. We are also here with LisaKathy Kirkbride with LendSure. It's their webinar today, and we are happy that she joined us. And then off camera, feeling a little under the weather, we've got Kelly Dunbar with Freedom Mortgage. And of course, we are your education team here at HAMB. So we've got a couple of moments while everyone is continuing to join. So let's just chit chat a little bit about the holidays. What's going on in Maui for you, LisaKathy?
So we will be celebrating Christmas with the family here, and we will be going to the Maui Food Bank as well to help volunteer, give out holiday meals. Me and my kids, we do that every year. We like to give back to the community.
Awesome. How was your Thanksgiving? Did you have a bunch of family fly in?
I did not have anybody fly in, but I have a bunch of family here on island. So we had 15 people. I hosted. I cheated though. I pre-ordered all my food from Whole Foods. So I didn't have to do much.
How did you like the Whole Foods?
It was good. Most of it was good. I was a little confused about how it was delivered. I thought it was all, so you do have to heat it all up.
Yeah.
And which, you know, so you got to plan for that. But the lady, when we ordered it, said the turkey only takes 20 minutes to heat up. But then when I got the turkey, I found it was an hour and a half it takes to heat it up. Yeah. so that put us a little bit behind schedule, but it worked out because it put us right in between football games. So.
Perfect. Yeah, the same thing happened to me.
Yeah, so we had.
Oh, go ahead.
Yeah, so we had a great time. That's all I was going to say. Yeah.
Awesome. How many family members came?
So we had 15 people here total.
Nice.
So there's 4 of us in the house, so 11 other people. Yeah. So I mean, I'm glad it was that. It could have been more. Alan has a really big family here. He's born and raised here, so his whole family lives here. So, but yeah, some of his brother and sisters came over, and some of the nieces and nephews dropped by in and out. You know, his son and son and daughter-in-law were here, and my kids came, of course, but they all live here. So, and I didn't have very many leftovers, which was really good for me because I'm not a leftover person. So,
yeah, I love that. Well, number one, it means everyone enjoyed it hot and fresh, and then it reduces the space in your fridge. I feel like after Thanksgiving, you're just shoving things into the fridge and closing your eyes while you close the door so nothing falls out.
Sure.
Good fun. What about you, Kelly? Anything fun for the holidays?
Well, it's so funny listening to LisaKathy describe her Thanksgiving, because I feel like mine was super similar. We had family, and I think there was 16 people total, and ended up doing a last minute panicked order to Whole Foods as well. So did about half Whole Foods, half homemade, just mostly because of oven space and timing, right? That's really the truth. And then, you know,
it makes a difference. Yeah.
Breaded, shove the fridge full of leftovers and close your eyes to hope the door's shut. That was a good summary right there.
Well, what my big question is, how many slices of pie did you eat? Because I did not put a stopper on any of the pie. If it was presented, I ate it. So I think I ate chocolate pie, pumpkin pie, macadamia nut pie. I had some cheesecake, and then some Halpia ice cream on top, because what's dessert without ice cream?
Oh, 100%.
Fair enough.
If there's ever a day to go for it all, right?
That's right. Well, you have to save it up for the whole year, you know?
Exactly.
Like, you say no to pie 11 months out of the year, so that on the one day you can be like, lay it out and line them up. I'm ready to go.
That's right. No holdbacks.
Right, yeah.
All right, everybody, it is 10:05 and we are ready to get this party started. So Welcome everyone to Hawaii Association of Mortgage Brokers, aka HAMB, final webinar of the year. It has been a great year in education. We appreciate you all staying with us all year long and supporting our sponsors and our education committee. So please, we absolutely love you joining us, and we're so happy that you're here today to welcome LendSure. We are with LisaKathy Kirkbride, and then let's go through our sponsors quickly. So our platinum sponsors for 2025 going into 2026, Freedom Mortgage, Kelly Dunbar also on the phone with us today, the Loan Store, New Res, DeKind Lending, PennyMac, LendSure, and Deep Haven. Our gold sponsors, Finance Factors, Title Guarantee, Angel Oak, Accra Lending, Advantage Credit, Foundation Mortgage, Remen, and Home Express. And our silver sponsors, Open Mortgage, Sierra Pacific Wholesale, Logan Finance, ARC Home Loans, and Cardinal Financial. Thank you all for your sponsorship and making HAMB all that it can be. In regards to our upcoming events, everybody, so the most exciting thing happening around the corner is going to be our holiday party next week. Hey, Rick, thanks for joining us.
Yeah, sorry for being a little tardy. I got my wires crossed, but happy to be here.
Yes, thank you. We've got Rick Harway joining us from LendSure as well. Thank you, Rick. We were just going through some of the announcements.
Great.
All right. So we've got our holiday party coming up on Wednesday, December 10th, from 1 week from today. Make sure you are there. It is going to be so much fun. It is at our usual haunt, Anaha. So everyone that has been to Anaha at Ward Center, gorgeous views, beautiful sunset, amazing space. And of course, this time around, we are going to have some awesome food to share with you over the holiday. And of course, drinks. We'll have beer, wine, all the good stuff to help you wet your whistle. And on top of that, one of our HAMB thank yous is that this year's holiday party is free. So not only should you come, but you should grab a friend or two and bring them along with you. Parking is free, the venue is free, and your ticket is on HAMB. So please come out and join us. That's 5 p.m. at Anaha, Ward Village, 1 week from today. We will all be there, and we will be looking forward to seeing you there. And it will also be our holiday party with our installation for the new board. So come see who your new representatives are and get to know them. We'd love to see you there. We look forward to it. All right, let's jump straight into our webinar today. Thank you, Rick, for being here with us today. Thank you, LisaKathy, for being with us today. And I will let you guys take it away. LendSure Mortgage Company.
Good morning, everybody, and welcome. I am LisaKathy Kirkbride. Most of you already know me. I'm your AE for Hawaii, but we're not just limited to Hawaii. We can do all 50 states. So if you have any other scenarios in any other states, which a lot of brokers do, also reach out to me on this. And I am joined here with our regional sales manager, Rick Harway. He's here for moral support for me. So we're going to go through our non-QM niches. And what we're going to talk about today is what we're going to, let me get through here. Sorry. What we're going to talk about today is exceptions versus guidelines. So most people know what our guidelines are, and we do make a lot of exceptions. And what we're going to go through today is the exceptions that we make and the most common exceptions we make. So that being said, we'll get right into it. So the first one we want to talk about is career professionals, lending to newly self-employed borrowers. We see this a lot here in Hawaii, especially with physicians and contract workers that come over from the mainland. So what we're going to talk about is we have less than 2 years self-employment history. There's no specific guideline for this program, but we like to see them under 85% LTV. We want the credit scores to be north of 680. The higher, the better, of course. And then there's questions you have to ask, right? Are they in the same line of work? Is there prior job stability? Can you theoretically qualify off their prior W-2 income? So let's say you have somebody that was a W-2 employee at a law firm, and now they become partner. So now they are self-employed. So that's one way to look at it, right? So we'll go through all of those, and we'll go through all the scenarios here, but we also do first-time home buyers, you know, with less than 2 years of self-employment income. You know, do they have strong reserves? You know, what are the compensating factors in this scenario for your borrower? The more compensating factors, the better off we are, of course. The higher the credit score, the more reserves, things like that. So it's just basically comes down to our common sense underwriting, risk versus, you know, the reward, basically. It's always risk versus reward in this business, right? So we have to look at what the risk is, and if the LTV is 50%, then we're more likely to take a higher risk than an LTV that's 90%, right? Which is always something. So if you have any of these scenarios, you should always call me to discuss these scenarios with me, and I will be there to help you. We also do less than 1 year self-employment history. There's a lot of cases for this to consider. LTVs will vary heavily on these. It's just going to come down to your borrowers and their credit profile, right? So you have a 1099 with contract guarantees. You have, you know, doctors, dentists, CRNA, software engineers. Here we have a lot of people that, you know, come from the mainland and work here as contract employees for a year, and then they leave again. But a lot of people come here and work as contract employees for 3 or 6 months, and they never want to leave again. So now they're here for 6 months and they want to stay, and they pick up other contracts. So these are things that, you know, happen and that come into play. We want to make sure that we can accommodate them and help them. So, you know, have they purchased an existing business in the last 3 to 6 months? You know, these are things that come into play. Like, say I'm a contractor and I have a big business on the mainland. I come to Hawaii and there's this guy selling his contracting business, and I just bought it. But I have a history of doing this, right? But my business here in Hawaii is brand new. What about my business in the mainland? How strong did that run? These are the things that we're going to look at. You know, 1099s with no contract guarantees, like truck drivers or independent contractors. Somebody that just started their business 10 to 12 months ago. You know, these are all things that we'll consider. If you have any self-employed borrowers with less than 2 years or less than 1 year, always call me. Let's go through their file. Let's go through their credit profile. Let's talk about them. Let's see what they have to offer. You know, if they have a 780 credit score, $3 million in the bank, and they're buying $1 million property at 50% LTV, hey, that's kind of a no-brainer, right?
Hey, LisaKathy, can I chime in?
I was just about to say, do you have anything else to say about that before I move on?
Just to add a little more color, and all good points that you made on things that we do on a consistent basis. And just for everyone's benefit, we do a lot of loans for borrowers less than 2 years self-employed. And as LisaKathy illustrated all the way down, we've done many loans with as little as 3 or 4 months self-employed. Some of the things to look out for, though, on the don't side, loans that we wouldn't touch, would be a borrower that had a significant job gap. They'd been out of work for a while, and then they're back to work for 3 months, 6 months, and whatever the circumstances are around why they were out of work. That's where it's going to start to become really challenging for us. So typically we're looking for someone with little to no job gap. Ideally, they were making equal to or more money in the new role than they were in their previous role, whether it was W-2'd or they were a contract employee and now they've become 1099, or as LisaKathy indicated, they've just decided to go out and start their own business, and they've got 6 or 7 months worth of bank statement income that we can use to support the fact that they're making equal to or more money than what they did in their previous role as a W-2'd employee. Those are the most common types of scenarios that we see. It doesn't always have to be a professional position. Again, it can be some blue collar, as a truck driver, we've done a lot of those types of borrowers as well, but it's the job gap piece that's really important that I wanted to make sure to illustrate. So something worth mentioning there too, but by all means, if you have a scenario like that, I encourage you to reach out to LisaKathy. She has a tremendous amount of expertise in knowing what we will and won't do, and she can walk you through your borrower's specific scenario.
Thank you, Rick. So I'm going to move on to our DSCR loans for first-time home buyers. I've actually closed quite a few of these myself. As we know, here in Hawaii, a lot of people may not own their own home, but they have a family home. I see this very often here in Hawaii, where you live in your parents' house, but your parents are elderly and the house is going to become yours anyway one day. And so you don't want to go out and buy a property to be owner occupied. So we want to talk about DSCR loans for first-time home buyers. So we're going to have to ask these key questions are very important. And like I said, where are they living? Where are they living right now? Are they buying in the same city or state? Where do they work? If I have somebody that works in Kapolei and lives in, I don't know, Haleiwa, and they live with their parents in Haleiwa and they're buying a home in Kapolei and they work in Kapolei and they're trying to do a DSCR there, and that they won't qualify on their income, then that would be a red flag for me, right? Then I'd dig deeper into that. But if they work and live in the same place and are buying a home, let's say the other way around, say they work and live in Kapolei and they're buying a home in Haleiwa, that's a rental property, that makes a little more sense. It's a highly common area for people to rent, especially your short-term rentals, vacation rentals and things like that. So all these things come into play. It has to make sense. Why are they buying an investment property instead of a primary? Typically, the biggest reason I see in Hawaii is because their family owns property and they live on the property with their family and they're going to get it anyway. So why would they buy something for themselves if they're already stable where they're at?
Right.
Do they already own investment properties? I have people that have investment properties that live, rent-free at home, so that makes a difference, right? Does the subject property cash flow? And, how does it cash flow? Those all matter, right? Typical challenges we face, can they document that they pay rent for their primary? That can come into play. Some people have rental properties and they might, like I live in a big house, right? And I might want to buy a condo, but I have the property I rent is 1,700 square feet and I'm paying $5,000 a month. But I want to buy this condo that's 500 square feet that doesn't accommodate my family. That's clearly going to be a short-term vacation rental. That's something that we would look at, right? I've been paying my rent on time every month, no problems, never been late with my rent ever, So, okay, that seems reasonable. They're not going to buy, I'm not going to go from a 1,700 square foot house with 4 people living in it to a 500 square foot condo, for instance, right? So it just has to make sense. Do they have a good credit history? Can they put down between 30 and 40%? Do they have reserves? Those are the things. The pricing is higher on these things. Will they accept the pricing on it? Because as we know, owner-occupied homes have lower interest rates than your DSCR investment properties, So these are all things that we want to consider. Rick, anything you want to add to that?
Yeah, one thing I would add, I've done a number of loans over the years for what would by definition be classified first-time home buyers doing a DSCR loan as an investment property. Another classification of borrower would be folks that are constantly on the road. Obviously, you guys live in a very unique environment, God's country, if you will, over there in Hawaii. And when people aren't working, they want to relax and be able to unwind a little bit. The first place everybody thinks of is to go to Hawaii. So we'll see a lot of people that are professional musicians, professional athletes, they're entertainers, and they're constantly on site for whatever it is that their career is. But then when they have a few months off, they want to buy a vacation home and they want to do so in Hawaii. And those are loans that we'll take a look at. And we've closed a number of those loans with those types of circumstances. Again, those aren't going to be loans you're ever going to find in our guidelines. That's where we're going to take a very common sense approach and just kind of evaluate the individual borrower's circumstances and make a determination if it's a loan that we can do or not. But we, for certain, we want to reassure everybody that we are closing a number of those types of loans with those types of circumstances that most other lenders are going to look at and say, oh, they're a first-time home buyer, and they're going to stop there. And we certainly peel the onion back further and take a much closer look at it. And we've successfully closed a lot of those loans.
Yeah, I personally have closed at least 4 in the last couple months here. And Rick, you're an intricate part of helping me close those.
Yeah.
I'm going to move on to crypto. If that's all we have to say about the DSCR. Is that okay with you, Rick?
Mm-hmm. Yeah.
Now, Rick, I'm going to need your help a little bit more on this one because this is a new subject for most of us, I'm sure.
Okay.
So cryptocurrency, crypto as an asset for down payment. So if the borrower uses a company like Robinhood or Coinbase where they get monthly statements, like a normal financial institution, that's great. If the borrower doesn't use a platform with monthly statements, we have to do it. I hope I'm saying this right, a Satoshi test.
Mm-hmm. Correct.
How you say that? And what that is it's a process used to confirm ownership of the account. So because they're not getting monthly statements, we want to make sure that they have ownership and control over their account. And what they do is they do a small deposit into that account, make sure it goes through, that the owner has control over it, and take it, and they get it back, minus whatever fees they charge for that, right? So that's how we figure out, is this their account? Do they have ownership of it? As the slide says, the worst case scenario is that the assets belong to somebody else, and then it could be used as a gift, but then we're gonna have to refer to our guidelines for that, right? So that's gonna make a difference. You're gonna have to pay really close attention with this cryptocurrency that we're not having any straw buyers. Crypto is not as easy to track as bank statements and things like that, so we're gonna do our due diligence to make sure that the account belongs to them, that they're the ones buying the property and they're the ones moving into the property. Borrowers who want to use crypto as reserves and don't want to liquidate it, we can do that as well, but we'll adjust the crypto accounts for 80% balance. So we're not going to use 100% of the balance. We're going to use 80% of it, just like you would for stocks or retirement funds, because those things can fluctuate and change, as we all know. Using crypto for asset depletion is a little bit more complicated because, again, with the fluctuation, we're only going to take 50% of the cryptocurrency on a 120-month draw schedule instead of 80%, where we would do for most accounts. Again, that's because of the instability in the market.
Right.
Can you please elaborate on some of the crypto? I haven't used any yet myself, so I don't know, but have you had any loans like that, Rick?
Yeah, happy to elaborate on it a little bit, but I'll preface it with I too have very limited experience with it. I will say that the volatility in the market, just in general, gets magnified within the cryptocurrency platform, if you will. And just the volatility appears to have a much more significant impact on the value of crypto accounts. So as a result, for any sort of coin-based income platform, we take a much more conservative approach there than if we did if it was an IRA or cash in the bank, obviously, or anything else like that. And then it just gets further compounded by how difficult it is to actually lock in what the actual account value is. A lot of times we'll see, yeah, we can get a screenshot from the borrower, but it doesn't have the borrower's name on it, doesn't have an account number that we can be certain that we're tying whatever information that we're receiving from the borrower is indeed the borrower's account. We've run into that a lot. Also, too, worth noting, we see significantly more straw buyer situations with crypto-based income or asset depletion loans than we do in virtually all of our other programs combined. It just seems to be more susceptible there, given how ambiguous it is and how difficult it can be to tie the borrower to the actual crypto account. And just there seems to be more opportunity there to try and push something through via a straw buyer scenario. So just word of caution is all I would mention there.
I do get questions on crypto a lot, so I'm glad we're going over this today. So if you guys have any questions on crypto, feel free to call me, and if I don't know the answers, I will get the answers for you. So I'm going to move on to something that's not very common here in Hawaii, but I know that we have a lot of borrowers that come from California or Colorado or Washington or Oregon, especially here in Hawaii. We do have cannabis dispensaries here in Hawaii, but they're medical only. And I don't know how many there are in Honolulu, but here in Maui, there's like 3. So unless one of those 3 people are buying a house, I don't really have to worry about this. But in California, and I know we have a lot of people come from California, this could be a big thing, cannabis income. But the thing is cannabis income can only be used for primary residence. Am I correct on that, Rick?
We've gotten exceptions for second homes and investment properties, but it's significantly reduced LTVs. But if you have something like that, I wouldn't walk away from it and say a hard no, but I would proceed with some caution. You're probably going to be in the 60, 65 range, best case scenario. And the rest of the file, the borrower really needs to be exceptionally strong. High 700 score, really strong reserves, et cetera. But we have made some exceptions for second homes and or investment properties.
And I know a lot of my LOs are licensed in other states, especially Nevada and California, where they do have cannabis. So if you have anything in those situations, please feel free to reach out to me. And if I can't help you, I'll get somebody at my company who can. So again, I'm just going to go over this a little bit because we don't really have a lot of this here, but if you run into it, know that we are one of the few lenders that will allow it. So we're going to do owner occupied primarily. If you have second home or investment, like I said, reach out and we'll talk about it. They need to have 2 years of stability in that business. They need to have a copy of the business license, have to have 12 months reserves. We can do full doc or 24-month bank statements, depending on if they own the company or if they work for the company, so those are different things we can talk about. So that's pretty much all I want to say about that, because like I said, I don't think I personally have never had this scenario come up. Rick, you may have, you're in California, so I'm sure you've probably seen this more often than I have. But again, if you have somebody in California, call us. Me and Rick will take care of it for you.
Absolutely.
Now, this is one of my favorite subjects, this full doc, which seems like an odd topic for non-QM, right? Because usually you think full doc, I'm going to a conventional lender. Well, full doc for us means different things, right? So full doc for us is 24-month bank statements is also considered full doc, right? So we have these full doc niches we want to talk about. Let's say you're a 1099 employee and you don't want to use your tax returns or a bank statement. You have 1099s. You don't have to use your tax returns. We can do 1099s or W-2s and use your lease and 3 months deposit instead of your Schedule E, for instance, so you don't have to provide your tax returns for your borrowers. If your borrower is getting $5,000 a month rent, you have the lease and you have 3 months deposits in the bank for it, we can use that. We don't have to see the Schedule E. If you have W-2 and bank statements for tip earners or for self-employed borrowers who W-2 themselves. I've seen that where I W-2 myself, but then I have my K-1 income, but my tax returns might not reflect as much money as I'm getting. So we can use tax returns and W-2s. Or if you have a business and a job, right? Some people have a business, especially here in Hawaii, people have multiple sources of income. So like I might drive Uber on the weekends, or I might do a Airbnb event thing, experience, not housing, but like experience, like the road to Hana. I have a borrower now that all he does is drive to Hana every day for people. And he makes like 15 grand a month just driving to Hana every day, which makes me want to change my job sometimes because all you got to do is drive back and forth all day. Sounds fun, but it's really not. If you've ever been to Hana, it's a strenuous drive. But so these are the things that we can combine things, right? If you're closing in an LLC or corporation, including with a reverse 1031 exchange, we can do those. There's no seasoning requirements on cash out refinances. We can do delayed financing. Your borrower bought a house cash because it had to go quick and they needed to recoup that money. We can do delayed financing on that. We can use market rents on departing primary residence without investor experience. So that means if you're selling you want to keep your primary home, you'll buy a new primary home, you want to rent it out and you've never rented out a house before, we'll use the market rents. We're not going to cut you down like a lot of people will. We have more aggressive timelines on income, you know, for like no income, you have a promissory note, part-time income, dividend income, things like that. These are all situations. We're going to try to find the most amount of income for your borrower that we can find. And I will tell you, unlike a conventional underwriter, we're going to pre-qual all of our files, so we have a small fallout. So if you're not sure what income to use, send me all your income and I will help you whittle through it. I will say, okay, we're going to use these bank statements, not these tax returns. We're going to use this, we're not going to use that. So we're going to find the most income we can for your borrower so your borrower can qualify for the house that you're trying to get them into. Rick, do you want to elaborate on the?
Yeah, the only
mixed
thing I would mention in there too that we didn't touch on that you might run into where you don't have an outlet would be jumbo loans. So we can actually do loans up to $5 million, and that might be the most impactful for you all in Hawaii, knowing that your property values have appreciated so much, and there's, you know, a lot of expensive properties. So whether it be a second home, an investment property, or primary residence, primary residences, we can go up to 5 million. Second homes, I've done over 3.5. Investment properties typically are 3.5 million and below. But and that would apply for all of our programs and all of our products. Again, depending upon how big the loan is, the rest of the borrower's qualifications will determine what we can do. But we can certainly be a resource for you there as well when taking into consideration larger loans. I know your lending options really they shorten up quite a bit really quickly when we start venturing into the larger loan sizes. So definitely something to keep in mind when you think of where LendSure can add value to what you're currently doing today.
And like Rick said, like if you have a property that's really big and it's a little bit more, reach out to us. We'll present it. We get exceptions all the time, you know? So that's what we're talking about, our exceptions. If you have a property and the loan amount's 5.1 million, but the borrower's got an 830 credit score, he's putting 40% down, he's got tons of assets, you know, these are things that we'll look at and consider, but you need to reach out to me. The best thing I can tell you is if you go, nobody's going to do this loan, call me. That's the best thing I can tell you. If you think nobody's going to do that loan, call me, and I will get on the phone and I will call Rick and we will get on with everybody we can and we'll do everything we can to get your loan closed. We will find a way to close it if you have a strong borrower. So always reach out.
Yeah, worth noting there too, LisaKathy. I think, you know, we'll certainly, if we know it's a loan that we can't do for whatever reason, we'll let you know that up front as well. The last thing we want to do is waste your time. So, you know, but between LisaKathy and I think we're boasting 60 some odd years of industry experience between the two of us, both wearing a lot of different hats and having underwritten loans earlier in my career, understanding the importance and the power of sometimes a quick no could even be better than a long, painful yes. So we work really hard to try and determine upfront what we call the elephant in the room, right? Or elephants if it's multiple issues on a loan, and address those up front. So then we know, hey, the rest of the file should be downhill from here. Or if it's a loan that, hey, we're just not going to be able to get comfortable with that. You know, one quick story on a loan that we just closed, and it was actually, I think we just closed it last month, LisaKathy, but a 247 square foot condominium.
Sure did. For Judy, who's on the call.
It happened to be Judy's loan, exactly, which is one of the reasons I wanted to bring it up. But LisaKathy brought it to me initially, and I'm like, I've done plenty of small ones, but I've never done one that small. Obviously, 247 is not going to show up in anybody's guidelines, but because Judy did such a good job of pointing out to us that it would, you know, what the issue was up front. She knew it was going to be a challenge, brought it to our attention, and then we were able to get it signed off before we even officially submitted the loan. So that way, when we knew that it came in, there were a couple other minor things, but certainly the 247 square feet was the main issue up front. And because we knew that, the closing went pretty smoothly, I believe, if memory serves me correct. And we just closed it, as I mentioned, I think it was just a couple weeks ago. But you know, that's a really good example of knowing what the issue is up front. We're able to address it up front, get everyone comfortable with it, So then it no longer comes up and we're able just to slide the rest of the file through rather quickly.
Absolutely. So this is something that we don't talk about a lot here in Hawaii, which I think we should talk a lot more about, are our 5 to 10 unit investment properties. We do have a lot of multifamily homes here. Usually they have 2 or 3 units in them, but especially in Hilo, I see this a lot where they have small apartment buildings with 5 to 10 units in it. I don't know how often that happens here in Maui. There's a few here. Honolulu has more, I know. I know every time I'm in Honolulu, I drive around and I see these little condominiums with 10 units in them only and things like that. So we do loan on 5 to 10 unit investment properties. There we go. So typically we're at 75% LTV for purchases, 70% for rate and term, 65 for cash out. Again, all of these things, these are our guidelines. So if you have something that's a little bit higher than that, you need to come talk to us, right? We want a minimum FICO score of 700. We want the DSR to be over 1.1 or more. We're not going to do a 0.75 on this necessarily as a general rule. We're not going to take any first-time investors on a 5 to 10 unit. And it says loan size is up to $2 million, which is something I think that, is why we don't talk about this a lot, but I know we've done them higher than that. Rick, do you want to elaborate on that a little bit?
Yeah, I've done a couple 5 to 10 units that are in the low 3 million range loan sizes. As high as 70% loan to value too at those bigger loans. So this is a product that we've seen tremendous growth in this year. I believe right now it's accounting for almost 30% of our total volume in 5 to 10 unit properties. So if that's an opportunity that comes across your desk from one of your referral partners, I highly recommend that you reach out to LisaKathy. It's something that we've gotten quite proficient in. We're closing loans in about 30 to 35 days. These loans take a little bit longer. The appraisals typically take a little bit longer, but they are loans that are closing. And as rates continue to drop further, obviously the improved cash flows are tremendous for the investor and a real opportunity for them to provide or be able to produce some passive income. So if you have those types of opportunities, again, consider us a resource there as well. And I might add, going back to the full doc option too, and even not so much with 5 to 10 units, but certainly 1 to 4 mixed use properties. And I don't know how often you all have mixed use properties over there, LisaKathy, but if that's something where you have a commercial unit down below, like a storefront, and then 2 or 3 residential units upstairs in some of the bigger metro markets, San Francisco, LA, San Diego, just to name a few, we see those fairly often. And those 2 are properties that we'll consider lending on as well.
And like I said, I see this a lot on Big Island. I get a lot of inquiries for Big Island, especially the Hilo side. They have a lot of small buildings with, like he said, a store downstairs and 4 units upstairs. So those are all possibilities that we can do. Again, I know the loan size for Honolulu might be too small, but it might not be for Maka'a or Waianae. There's some smaller places there. I just don't know what you guys are looking at over in Honolulu, but I know that Big Island does have a lot of those just because I've seen them. So we're going to move on now to condos and condotels. We were just talking about this a little bit about the condotels. And hold on, sorry, I went too far. Let me go back to my, I'm so sorry, I pushed the wrong button, everybody. Sorry about that. I got trigger happy over here. Let me get us back to where we were. Okay, here we go. So on condotels, this is what we were talking about a few minutes ago. So we're typically 75% on purchases. Now the condo that Rick was talking about, the 247 square foot condo, we did that at 65%. So typically between 60 and 65% is what we're looking at the smaller units. There are several, I've closed like a few loans in Maca'a. There's a whole bunch of condotels out there that are really small, that have little kitchens in them. So we're gonna look for kitchens. The more of a kitchen it has, the better off we are. So even that 247 square foot apartment that we had a full-size refrigerator and a little hot plate. And that was kitchen for us, right? What we don't want to see is a bedroom, right? Just like a hotel room, right? So we want, the more of a kitchen has, the better we have. I can tell you, I've done the Hawaiian Monarch. I've done about five loans in there, maybe 6. They have studios, they have 1 bedrooms, and then they have the lock-off studio 1 bedroom, which is considered a 2 bedroom, 2 bath when you talk about lending. So I've done several of those over there. So these are all under 600 square feet. And the lock-offs have a kitchen on one side, not a kitchen on the other side, just a refrigerator and a hot plate on the other side. So these are all things that if you think that nobody wants to do these loans, you come see me and we will get it screened ahead of time, just like we did for Judy's loan, and make sure we can get it done before we get too deep into it and we put a whole bunch of work into something we can't close. The more it feels like a condo and less like a hotel room, the better off we are. Again, those we're going to stick to a lower LTV if they're under 600 square feet. So just keep that in mind.
I would just to add a little more color there too, and this is more of a general comment about the way we approach loans. Obviously, we are looking to fill a void, what we believe is a void in the market, where not only that, there's been tremendous growth over the last couple of years within the non-QM sector of the market, right? That really didn't even exist 5-6 years ago. And it's now the biggest growing market within the overall mortgage industry. But we still believe there's a large section of the market that are worthwhile credit risks that people are overlooking, condotels being one of them. So what we do to be able to address that and try and know upfront if it's a loan that we're going to close or not is we pre-approve 100% of our loans. So when you have that scenario, whether it's an income challenge or a property challenge or a square footage because it's a smaller condotel, whatever the issue is, it's cryptocurrency, we're not quite sure how to do it. We're going to go ahead and have that file fully underwritten and approved by a senior manager before we even look to disclose the loan. Because by and large, I believe now we're a little over 70% of all of our loans that we close have 2 exceptions or more to our guidelines. So, and again, that's not to say that we, don't do loans that meet the guidelines perfectly. We certainly do. But by and large, most of the loans that come in have a couple of exceptions because these people aren't folks that can walk into a traditional bank and be able to secure financing for one reason or another. They can't document their income. They're investors and they own a number of investment properties that exceed conforming guidelines, or they're looking at unique properties. The list goes on and on. So when you have something and you're sitting there scratching your head going, how do I even put this loan together? Where do I take it? We just want to encourage you to reach out to LisaKathy and think of LendSure first and foremost to be your partner to help extend your product offering. And at the end of the day, all we're looking to do is to help you close more loans. We do a lot of things really, really well. Again, we're closing a little over 220 million a month on average. And trying to look to grow well beyond that as we push into 2026. But it's going to be, for the most part, focusing in some of these unique underserved markets that have often been overlooked out there, in the past.
Absolutely. But this is my favorite because we have a lot of this going on in Honolulu right now, new build condotels. So we will be the first lender in, but we will not be the first one to close a loan. You need to have a cash closing in there, at least 1 or 2, so we have some comps in that building. Oftentimes the project's incomplete, the HOA hasn't turned over yet, reserves are low. There's all these issues that come up with new builds and new condos, and a lot of lenders won't touch them. So we want you to know that if you have a brand new condominium complex and they've had 2 or 3 cash sales in there, and you're looking for an investor to get in there, a lender to get in there, to help your investors or your homeowners get these properties, call me. What we won't do is more than 20% of the total project. We don't want to have all the loans in that complex in our name, as much as I would like to. But we're going to limit that to 20% of the total amount of financed units. And so that's important to know. So if you have a new construction or something that's going up, I was working on one with America a while back, and she and I were working on it, and it was in Ward Village. And unfortunately, the buyer backed out, but it was a brand new construction, and we had like over a year before it was going to be finished. And we went through all this process, and it was a good learning experience, I think, for all of us. I think America's on the call, so she can chime in maybe another time. But we worked really hard on it, and unfortunately, the buyer had to back out. But again, we have a lot of new construction, especially in Honolulu. You know, they got Ward Village just went up. Kaka'ako's building up like crazy. You know, they got the new train coming through there and all that stuff. So if you have new construction, you're concerned about what lender you're going to go to, come see me. I'll be happy to come and take a look at everything for you. Is there anything else you want to say about new construction?
No, I think you nailed it. Good job.
Now, this is the fun part. This is something we can do that a lot of lenders don't do. We call it stacking. Or I like to say, you'll hear me say, rolling the points in. I like the word rolling for some reason. But at LendSure, we call it stacking points. And what that means is you think about your points that you're charging the borrower, right? You're charging 2 points. So now the borrower has to come with, you're closing $1 million loan. Now they got to come with $20,000 more in for the 2 points you're charging, right? So now their cash to close is not 200,000, now it's 220 plus closing costs. So maybe they only have 200,000. Maybe they don't have all of that. So what we can do is we can roll that, or we say stack it into the loan amount. Think of it like your VA funding fee. It doesn't affect the LTV. It doesn't affect your pricing on the LTV, but you'll have a CLTV that's higher, right? So if you're at 70%, your CLTV might be 71.5% or so forth. And what that does is it allows you to give your borrower the best rate without coming out of pocket with too much money. So I have brokers call me all the time and go, well, what if I build my points into the rate? You can do that, but now instead of giving your borrower a 7.25 rate, you're gonna give your borrower a 7.75 rate. Their interest rate is gonna be a half a point higher. They've got this loan for 30 years. You do the math on it. It's much more beneficial to the borrower to stack those points and keep his interest rate at 7.25. Why would you raise his interest rate just to keep him from coming out of pocket if you don't need it? He doesn't have to come out of pocket anyway with us, right? The only time you're going to have that scenario is if you're over the LTV. If you're at 80% and there's no room for stacking, or if you're anything over 80%, you're not going to have room for stacking. There's, you know, compliance issues for that, right? So I'll give you an example. Here's your $1 million purchase with 50% down payment. You're 2 points to the borrower. Our par rate's 8% here. So we're gonna buy down the rate to 7%, and we're gonna stack all, and the broker's charging 2 points. So we're gonna stack all 4 points. Now your LTV is at 52%. Your down payment is still $500,000 versus your other lender who's at 7.5, and the down payment's gonna be way more. And then you have your monthly payment's gonna be less, you know? Your cash to close is going to be $10,000. Yes, the total interest you're paying, which is probably the most important part to any financial savvy borrower, is going to be way less. So that you're saving $30,000, $40,000, $50,000 by stacking your points for your borrower in the long run, right? So these are things to consider when you're looking at rates. If you absolutely want to build your rate into your points into your rate, I'm not going to stop you from doing that if that's what you want to do, but I'm going to advise you every time that stacking is better than building it in. You know, so that's just, it's more beneficial to your borrower. You're going to create a better relationship with them. You're going to be able to show them how much money they're saving. You can use this as an example because you're going to get a copy of this anyway. So you can use this example. At this point, if you did this loan right here, you've saved your borrower, to be exact, $33,000 and some change. you know, and I guarantee you they'll be really happy and they'll be bringing a lot more loans your way, friends and family and everybody else. Rick, you want to say anything else about stacking?
I think it's one of the things that really differentiates us in the marketplace today. You know, customers that do a lot of repeat business with us really have grown to love our ability to be able to finance, you know, their origination costs and our buy down costs into the loan amount. And it's something that gives them a competitive advantage, and one of the many reasons that they come back to us time and time again when they don't have an in-house option available to be able to close whatever loan it is that they're looking for us to be able to help them with. But for those people that get to know us really well, I think it's the thing that they say that the reason that they come to us, in addition to the level of service that we consistently provide to our customers as well.
So now I'm going to ask the big question. Why partner with LendSure? Well, for one, I'm here in Hawaii, not just here on this call, but I'm here in Hawaii. So I'm available for you at times when your mainland lenders aren't. If you call me at 6 o'clock in the evening, it's not 9 o'clock at night or 8 o'clock at night or midnight if you're on the East Coast. You know, I am in the same time zone as you. You can call me at 8 o'clock. You don't have to worry about it. You're going to wake me up because I'm not in another time zone. If you need something done, our company's in California. They're not way out of the time zone. And I get up early. If I need something done and I need a question answered, I'll get up early, get on the phone with Rick at 5, 6 a.m. my time to get your answer before you wake up. I might not be able to get it to you in the evening, but I'll get it to you first thing in the morning if I can. So these are important things to know, that I'm here. I've been working in the Hawaii market for almost 10 years now, and I know all the pains of dealing with Hawaii. I know the pain of, for instance, in Maui, we have a lot of ag land, you know, that's residential in use. A lot of lenders don't like that. We will. If it's residential in use, we'll do it. You know, we have, their closings are different, right? We close, but we can't actually close until 2 days after we fund because that's what we record, right? So we have to plan that. If your COE date's the 10th and you have to record on the 10th, that means you have to fund on the 8th in order to record on the 10th. And these are things that I'm familiar with, that my company's familiar with, that a lot of mainland lenders drop the ball on. When you say my closing date's the 10th, they think that's your funding date. Now you've missed your COE date by 2 days because they don't understand how our timelines here in Hawaii work. We do all of our loans are we go through a pre-approval process, which is a pre-underwrite. Anybody who's done a loan with me will tell you that once you're pre-approved, that's it. 99% of the time, unless something weird comes up, unless at the last minute they go out and buy a yacht and don't tell us about it, or a new Mercedes that costs $800 a month, which now affects their DTI, you know. These are things that we're out of our control and out of your control. You know, if there's some weird title thing that can't be resolved, those are things that obviously we don't know up front. But when it comes to your borrower is vetted. If you have a condotel that you're question, we'll vet that ahead of time. You know, all these things that come up at the last minute, we're gonna knock all those out up front so we can ensure that your loan is gonna close before we even get disclosures out and start ordering appraisals and costing your borrower a lot of money. So I think that's really important. You know, sometimes the pre-approval process takes longer than the closing process if it's a complicated file. I had a file once that took me 2.5 weeks to get through the pre-approval process. But once we got it all ironed out and got all the exceptions and elephants in the room, for lack of a better word, you know, all worked out, we got it disclosed and we closed it 10 days later, you know? So these are things that you go, oh, the pre-approval process is taking so long, but it's for your benefit. It's to ensure that if we just throw the loan in there, we go through 3-4 weeks and get disclosures out, order appraisal, and spend all this money, and then this comes up at the last minute, then you're gonna be upset with me, your borrower is going to be upset with you. And we want to avoid all of that. So we're going to pre-screen and pre-approve everybody up front. We'll even do pre-approvals on TBD properties. Same thing for our bridge loans. If you have a buyer that wants to sell their house, they want to put it on the market, they want to buy another house, but they haven't found another house yet, send me the bridge and a TBD purchase. We'll get them qualified with their down payment from the bridge and everything while they go hunt for a house. Now your borrower can feel comfortable and confident going out and searching for a house, you know, and they know what their price range is. I think that's really important. So we close our loans typically in 30 to 45 days. I've never had one. I've met every 30-day COE date that we've ever had that was in our control. So we've had, you know, there are circumstances that were maybe the buyer or the title company or things like that, insurance, that's out of our control. There's nothing we can do about that. But we are very, very adamant about making sure we meet these COE dates for you guys. We have, I think I've talked about this several times for you guys. We have unbranded marketing materials that go out. We have flyers, banners for social media. We can add your logo information. I have, you know, white label stuff that has information about our loans that you don't have to put our name on. You put your brokerage firm on, your name on, your company on. They call you about the loan. You know who you're sending the loan to. So that's pretty much it, unless Rick has something else to add, and then we'll go to questions.
No, I think you wrapped it up really nicely. So really good job.
Awesome, LisaKathy. We do have some questions for you.
Great.
So for the first question was, and if you've got a slide, go ahead and put it up there. So this comes from Cynthia Spencer. It was, what is your contact information? So if I did put that into the answer box for you, but if you just want to slip a slide up there to make it easy for everyone, they can copy it down or snippet it. And then also for everyone on this call, remember, you are going to get the recorded version on this as well. And then second question from Cynthia, have you had any recent loans approved at the Waikiki Banyan?
I would have to look that up, but I believe we are able to do those. Rick, do you know off the top of your head?
I'm not familiar with that. That's a property, a specific property
It's a
development.
property, it's a condotel. It's one of the, we actually, now I remember, we did talk about this. This is one that has multiple buildings, if I'm not mistaken. That has, like, part of it is timeshare and part of it's condotels. Am I mistaken about that? Is that correct?
Is that the
Judy,
issue
you
with it,
know?
Judy? It's part timeshare, part condotels, as far as you know?
I do not believe so. Cynthia, if you are still on the call, feel free to type that in there, but I do not believe so. We've closed some in the Waikiki Banyan before, not necessarily with LendSure, but in the past, and I don't believe that came up.
Okay.
But what I can tell you, Cynthia, and Rick and LisaKathy actually brought this up. We had actually closed a couple of buildings down at the Marine Surf. It was a true lodging unit, like they mentioned, well under 300 square feet, just tiny little thing, no kitchen, no cooking element, nothing, just a refrigerator. And we were able to get that done. So I believe that with the Waikiki Banyan, LendSure would be a good bet for you. Another piece of insight is, before I sent that file over to LendSure, you know, there's a handful of sponsors that work through condotels, small condotels, true lodging units. And some of them have changed their guidelines. In fact, what I can say is what I found through my calls and emails is the majority of them have changed their guidelines, and that true lodging space condotel has really kind of morphed and started to move away from us. And LendSure was one of the only ones that I was able to get a firm upfront approval from, which made me comfortable to send them the file. So I would definitely say send them your file.
I appreciate that, Judy, a great deal. Thank you.
Yep.
It's you know, going back to the other property, again, not knowing the details there, to Judy's point, I would encourage you just to reach out, and maybe LisaKathy, we can do a little more research on whatever specific issues might potentially pop up on that particular development, so we know what it is that we're dealing with, and make sure that that would be something that we would be willing to lend on. If it is a part timeshare, part condotel, or even just traditional condo type development, I will tell you, we've done a number of those types of properties down in the Florida market. And I'm sure if that's the case for the property there in Hawaii, that would be something that we would also be able to do. But we'll do a little more research and then be able to get back to you.
Yep. So Cynthia's chiming in here. Yes, leasehold, timeshare, fee simple, special assessments for deferred maintenance on the pool deck and elevator, multiple buildings, less than 100% hurricane. So looks like we've got the
A
rubber
whole host of
ball
issues there. Yeah,
Hawaii
whole
special.
host of
Yeah, I
issues.
thought there was that, yeah, the timeshare in there. I remember us talking about this before because if the property is, so if it's a leasehold, it has to have,
Sorry, not timeshare. Yeah, I was thinking that was a little strange because when the last time that I did a loan in that transaction, in that building, the timeshare did not come up. But it's got some leasehold, it's got fee simple, and it's got leasehold. So it's mixed. And there are some special assessments and special things going on with HOA for sure.
Cynthia, I'm gonna do some research and I'll send you an email when we get off the call because I feel like I'm familiar with this unit, but I gotta look in my files and see, but I think that I have looked at this before. So I will let you know when we're off this call.
Yeah. But I still concur. LendSure is the best candidate for this one for sure. Okay, we are at 11:01. Any last questions coming in from the attendees? If you'd like to chime in, go ahead and ask your questions now. We've got Rick and LisaKathy for just a minute or so more. Okay, perfect. LisaKathy, go ahead and announce your phone number since your phone number is not on this slide.
Right, so my cell phone number is 808-757-3149. I'll say it again for everybody, 808-757-3149.
Excellent. All right. Well, thank you everyone for joining us today. What a pleasure to be able to bring this education to you from HAMB. Thank you, LisaKathy Kirkbride. Thank you, Rick Harway. And thank you, LendSure, for being here with us today. This was so awesome. Thank you.
Judy, we appreciate it very much. Always good to see you.
Always good to see you.
All right. Take care, everybody. Merry
And
Christmas
hopefully
as
we'll
well.
see
Happy
everybody at the
holidays as
holiday
well.
party next
Happy
week.
holidays.
All right.
Holiday party.
All right. Bye-bye.
Bye.